today we're going to take a look at the statement of cash flows. You've already seen a video on why it's important, but today we're going to be taking a look at how to create the cash flows or what they look like. Okay, so you can see here I've got my statement of cash flows. We've got three activities. We've got operating activities, investing activities, financing activities, and then down here we have a summary. Now remember, it's important to know if a company has cash, because if they don't have cash, they can't pay their bills. And so this is kind of what this is for. This tells us how much money are we making by operating our business. You know, this is where our income should be. So this is typically positive. It should be. That's our goal. Investing activities is investing in things so that we can do the business. So like if we make something and we need a factory, we might have to invest in a factory to make things. And then we have the financing activities, which is where we raise money so that we can then invest in things so that we can make money. And so anyway, let's get started. We've already kind of talked about that. You've seen a video on that. Today's really focused on how this works. So net income before preferred dividends. That's the first thing we want to see under operating activities. Well, if you have already done your income statement, which is why it's first, then you can actually go over here and find that net income before preferred dividends right there, $72,309. So we're good. All right. What we're going to do is we're going to go back over here. We're going to put that here. So I'm going to put 72,000. Actually, I'm going to put a comma, $309. That was net income before preferred dividends. So that's us selling things and then paying off, some things with cash. We paid off some things we owed. We paid our bills. We paid our workers. We paid for our inventory. All those things went out, and this is like the profit that was left before dividends. Okay, but we have to make some adjustments here. It's good to see this. So due to changes in working capital, which you'll see why this is here in just a second, but we might have had something happen to our accounts receivable. So remember, accounts receivable is an asset, but it's an asset that we haven't actually gotten yet, right? It's owed to us. So a customer promises to have paid, but they haven't paid the bill yet, and so we don't have that cash. Remember, the cash flow statement is all about cash. We don't have that cash. So we're actually going to make this a negative number, which is why it's in parentheses. And it's going to take away from my net income because it's not like we lost that money, but that's not cash in the bank, and that's what we're trying to look at. Okay, we bought some inventories. Okay, so that's an asset, but we lost that cash, so we include that here. Increase in accounts payable. Now this is positive, which seems strange because now we owe somebody, but because we owe somebody, we haven't spent that cash. So we've retained that cash. We kept that cash. So that's a positive. We still have that cash. And an increase in accruals, same way, positive. Okay, so the question is how much cash was actually provided if it's positive or used if it's negative by the operating activities. So what we do is we take this equals and we add it all up. Just add all this. So the cash we actually got out of this year was $15,846. Good thing it's positive. If it's negative, that's a problem. But we have positive cash. We have cash. We've gained cash this year to spend on things. Okay, that's good. All right, but there are other activities going on, such as investing in things. So maybe I invested in a new vehicle for one of the delivery employees or something. And so there's an increase in my assets, which means I spent that cash. What we're going to do is we're just going to add in this amount right here. This is the only amount that was provided or used by investing activities. So we use this much cash in investing activities. Okay. Then we had financing activities. So we took out a new loan. This loan probably was used to get this asset or something like that, right? So that increased our cash. We have more cash because we took out a loan. But then we also paid for preferred and common dividends. So that cash left us. So positive because it came in, negative because it went out. and we're going to add these two up. So that equals this plus this negative. So this is how much cash we had at the end of our financing activities. So now, I got ahead of myself earlier, now we take the net cash from the operating activities, the net cash from investing activities, net cash from, this should say financing activities, my bad. So we take the net cash from all three of these, and that's our net change in cash. Now mine already automatically updated, so I'll just redo it for you so you'll see it. It was this, plus this, plus this. That's $13,000 overall we have added to our cash in bank. Okay, and at the beginning of the year we already had $32,000, so we didn't have to spend any of that because we made more cash, we made new cash. So at the end of the year we should have this plus this as cash in bank. All right, so that's the statement of cash flows. Feel free to rewatch. If you have a question, maybe I confused you because I made a few mistakes there. But if you have any questions, just feel free to ask or rewatch and then move on to your practice. All right, good luck.